Hi, welcome to the Market Alert, Friday the 27th of March 2015. Starting off in the 5-minute chart, you can see the market opening here. We get prices being thrust down sharply around 50 points there, coming off the lows. And just to bring this type of price action to your attention, if you get a red professional selling bar like this and the market comes off the lows and closes in the bottom third, you will find it's generally followed by professional buying and prices moving higher. So as soon as it comes off the lows there, you will see the market then move higher. We get a PTI buy here, but again, just have a look at the volume in this bar. This is selling pressure in this market. You can see from the volume. Let me just pop the crosshairs on so it ties in with the bar there. You can see the volume is greater in this price bar here, and compared to the range of the previous bar, so there's some selling pressure around. The market drives through with a professional buying bar, and then if you look here, we've now got more selling than buying, and this is the normal sort of first half an hour as the market opens, trying to find its feet. And these types of PTPs, unless the momentum is there to drive the market, you will see the professional traders, what they do is they will run the market in one direction, bring it back, and then reverse it and send it back in the direction they want to go, so that it just wrong foots most of the traders. So here we've closed above the psychological level. There is some buying there, but then it's immediately sold into, and you can see the volume is greater. The market hasn't moved higher, and then this allows them just to take out the stops, moving the market back down, and then eventually we get down to the 17,600 level. The market closes back. You can see an increase in volume, and then they move the market back up to where it was before they had their shakeout. The market then trades sideways, and then we go into the quiet session. No PTIs through this bit, but the market moving higher. We've got a triple X here, and if you mark up a triple X, you can see it was stopped out. Now I'm going to reiterate this again, that the last few weeks I've been talking about increasing the stop to 50% on the PTPs and the triple X's as well, because this way it allows the market to breathe a bit more, and there you can see the market coming down to the scalp level before being taken out, or the stop has to go above the high to the left as well, just to give it that bit more room to actually breathe. Again, this is part of the change in the market since January, that increased volatility there. So we have a sell PTI here. We see the market trading down to the psychological level, which is given a maximum down to this psychological level there of 28 points on this one. And then we get the market giving a potential buy reversal. This fails to materialize, probably because the market's already done the move earlier on in the session, and there's no momentum to actually go back and retest the highs there. So we've got the buy signal here with the PTI, which we draw in there, and then of course we have the triple X to the downside there. So a loss of 23 points on this trade here, and then picking up the 20 as the market goes down there. So not the best of days, but it was quite a choppy directionless day for most of the part, and then through the quieter session you see the market trading to the upside there, which is always a very difficult one to do, because normally the market would trade sideways, which it does there, and 15.30 the cutoff there. You can see we've probably got a buy signal there as well. If we were to remove the trade, let's just have a look. I'll just drag this down to remove hide outside of PTIs. No, we don't have it there. I thought there might have been one there, so it's obviously beyond the 25 point range there, but we have the short there and the long there inside of the the normally non-trading times for the PTIs, but the market choppy enough to actually give additional signals there. It's always a difficult one to decide whether you should trade through that quiet period or not. Yesterday it would have worked out fine. Some days it does, and some days it doesn't there. So in the daily charts, we've got a test. We've also got an increase in volume as well. Big volume for yesterday. They've been buying this market back. Whether it's got the momentum to move to the upside remains to be seen, and that is going to be down to economic news today. And there's nothing out until 12:30 when you've got the final GDP figures to be released. They're forecast to be 2.4. And then Yellen is going to speak at 7:45 p.m, which is a bit too late for the market. It'll be the last 15 minutes of the trading session. So I'll be interested to see if the market has the momentum to drive up, especially if the GDP final figures come out at 2.4 instead of 2.2. That's just what the market will be looking for to actually move higher and possibly reverse this. If not, you will see these lows retested, and I spoke about these yesterday, that there was a low in place here. We've seen the buying come in now, and it's a matter of whether the market will hold there or not. In the implied volatility, it increased yesterday because of the initial move to the downside, plus the previous day's momentum to the downside as well. This has seen this increase to 14.13, and again you can see that reflected in the price chart at the bottom there. Right, that's it for me for today. Also keep in mind tomorrow, early hours of Sunday morning, clocks go forward and everything reverts back to normal on Monday. You'll see the normal 2:30 start and 9 p.m. finish for the Dow. Have a great weekend. See you in the next edition of the Market Alert. As ever, thank you for your support and also for watching. See you in the next one.